Welcome to the Broker's Lounge with Eddie and Carlo. Disclaimer, the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.
Hi everyone and welcome back to the Broker's Lounge, the podcast where we break down all the complexities of finance here in Australia. My name's Carlo and I'm joined once again by my esteemed colleague Eddie.
Thank you, good sir.
And today we're going to be diving into construction loans, the whole process. You know, what is a construction loans? How do they actually work? And what you really need to know before you go ahead and apply for a loan. So before we do, how are you, mate?
I'm good, mate. I'm good.
Excellent. Good to hear. I'm glad to be back in the chair.
Yes, you've been away for
Martin's filled the chair quite nicely.
Yes,
So,
you were away last week, so
I was, yes.
we had a replacement.
Visiting the family back in Adelaide for a lovely little wedding down at one of the wineries down there. So it was quite nice.
That's beautiful. While I was doing the work here, he was enjoying some time off. But
you're welcome.
Such is life, you know.
Someone's got to do it.
Someone's having fun. Someone's working. Yeah. But no, good to have you back, mate.
Thank you.
Have you back.
Thank you very much. So,
March already, first quarter, almost done, third month.
I know.
So yeah, time's flying, but things are good. The sun is still shining, and well,
I think
we've
unfortunately, poor old Queensland is copying it at the moment with the lovely cyclone. So, but I look out the window now and we've got beautiful blue sky and sunshine. It's going to be
last few weeks, I guess.
Yeah, exactly right. And then before we know it, daylight savings finished as well, and we'll be driving home in the dark.
Back to the grind.
Yeah, can't wait for that one. So very good.
Construction loans.
Maybe start off, Eddie.
Yeah, they're
What's
pretty much
construction loan?
Construction loans are basically when you're doing a build on your property, whether that's major renovations or a newly built property.
Mm-hmm.
So basically, you'll go out. The lender will give you a loan for the construction purpose, and basically, usually banks do the progress payment stages where you go through the 5 different stages, which we can get more into later on.
Sure.
But basically the bank controls the funds. You get invoiced from your builder, then the bank pays every invoice as it goes. So whether you're building a new house or you're doing major renovations where there's structural changes to the property, and you're applying for lending, it has to go through the construction loan phase. And it's similar to normal loans. The only difference is basically the bank controls the funds in stages and the interest-only period during the construction period. So from a eligibility criteria, it's pretty much you have to be able to service the debt. As per any other debt, you need to have your everything credit check, your income, your liabilities, assets, all that sort of stuff. That needs to be in line to be able to get the lending that you need. Lenders, most of them, they do 80 to 90% LVRs on the construction. And the way they value the construction is based on the valuation that will be done after construction is complete.
At the end, okay.
So you need to be able to pay the deposit on the construction, separate to the land. So the way it's done usually, so you have to buy the land first, and that would be a separate loan. And then you need to start the construction later on. And obviously once the build is finished, you'll have one loan to look into. So maybe if you take us, Carlo, a bit more through detail on the process.
And obviously the first thing that we always recommend to our clients is probably getting that pre-approval. Because there's so much involved with a construction loan in terms of having to engage so many different people. You've got architects, you've got builders, you name it. And every part of that process typically costs clients money as well. So you can't just engage an architect and
get the
do it for free. You engage a builder, that's gonna cost you money in order to get everything all drawn up, ready to go. So what we say to people is at least get the pre-approval in place to be able to demonstrate that you can afford a loan of that particular size. So that if you do need to go further down the process and getting the architect drawing things up, it's going to be all worthwhile. You may have to outlay a bit of cash at the beginning in order to fund these costs. But at least you've got the backing of a bank who's saying, "Yep, we'll back you." And obviously, a lot of that pre-approval is based around a projected end value of the property. You mentioned that that we class as an on completion valuation.
Yeah,
so
tentative on
and
completion.
typically valuers need to have copies of plans, specifications,
Permits,
the whole building contract, all the permits.
Specs, yeah.
So it's like that happens down the track, but in order to at least get a pre-approval in place, we have to be guided by clients in terms of what the end value is going to look like. And you can pretty much do that fairly easily in the sense that most clients typically know what the actual the build cost is going to look like, a rough estimate anyway. We can do a valuation on the land component and typically add those two together to derive what potentially the final value is going to look like. Now, it may come out slightly different from that, but it's just a good ballpark figure. And obviously, you don't want to be pushing the envelope too much when it comes to that. So that's obviously number one, get the pre-approval in place. Secondly is obviously engage the builder. Once you've obviously got that pre-approval, get the building contract all finalised. And that's a fairly lengthy process for some people because there's so many different parts of the building contract. They typically ask you to go out there and select what tiles you want, what
brick
carpet,
styles.
I've had friends who have gone through it, and I sit there and go, I don't know how you do it because I'm not a type of person who can actually visualise what a property's going to look like at the end. It's like, just show me what it looks like completed. It's a fairly lengthy process.
I went through it, and
so typically, how long would that process have taken you to actually finalise?
Did it in about 4 weeks.
Wow!
Because we were kind of in a rush.
Yep.
So we did it in 4 weeks, but definitely being married and having a woman doing that part helps. But sometimes it doesn't help as well.
Honey, I'd really love to have these type of tiles, and all of a sudden your cost blowouts. So
$20,000 more.
Yeah, and that's always the trick when it comes to building contracts. That most people get given like a rough estimate, and then they go, by the way, all your variations now add up to this. I've seen variations almost equal the amount of the base contract.
Yeah, 100%. Because you add. We'll just upgrade this one, upgrade that one, upgrade.
I want marble from Italy, from Milan. So can
put the fire pit there, put that, put this, and then you're like 40, 50K above the actual contract. But yeah.
So just be prepared. It can be a fairly lengthy process, or if you're good like Eddie and has a lovely wife who can get it done in 4 weeks.
Yes,
hats off to you, mate. And obviously the next step is then submitting an application to the actual lender. And now that you've got all the building contracts and plans and specifications and all that sort of things, so you can the lender can actually form a proper valuation on an on completion basis. And then we obviously submit it to the lender, get them to properly approve the actual loan itself. And that's when it really starts to get real for people.
Yep.
So, because then we go into we've got formal approval, they're typically settled on the land. It's now around the progress payments. And as you mentioned earlier on, Eddie, the bank will control the funds. They're not just going to say, here's $500,000 and pay the builder as you need it. No, they're going to want to make sure that it's done properly so that and the reason why the banks want to do it, they want to make sure there's enough funds left at the very end to complete the project. There's nothing worse for a bank to have an uncompleted project and all the loan funds are being utilised.
Because they can't even sell that property if they
correct.
Want.
Yep. Yeah. They're potentially at risk then. The clients are at risk. Everyone's at risk there. So the progress payments are typically divided into 5 stages. Banks normally want that minimum of 5 stages. Some of them will accept slightly more than that, 6, 7, whatever it might be. So, and if we break it down to the individual stages, these are typically the normal ones. So you have the slab stage, which is where concrete trucks back themselves in and pour your foundation. So that's pretty simple from that point of view. And each of these, before I keep going, each of these stages typically carry like a certain percentage of the total building contract as well.
Yes.
So the banks normally have ranges that they need to fall within, but I haven't seen too many builders that have gone outside of those ranges in terms of what percentage. So next stage is obviously the frame stage. Pretty simple as it sounds. Timber frame goes up or steel frames go up. Basically the skeleton of the actual house ready to go. So then we move to the lock-up stage, which is where everyone really wants to get to, because then once you get to lock-up stage, that's essentially walls go up, internal walls, outside walls, windows, doors, so they can close everything up and then continue to work on the inside regardless of what the weather's doing as well. True. So that's why everyone tries to get that lock-up stage fairly quickly. And then we got the fixing stage. This is where all the intricate stuff gets done, all the internal work, the plumbing, the electrical side of things, painting, you name it. And then we get to the final stage, which is the completion. So this is where all the final finishing touches get done. Council inspections get done. Everything gets signed off to say, yep, this has all been completed. It all looks good. Final payments are made. Builder walks away nice and happy. Hopefully the clients walk away nice and happy as well, because I can tell you this much, once that final payment's made to the builder will go,
see you later.
See you later. And if you got any, so we always recommend to clients before you sign off on that final completion stage, make sure you've gone through your house with an absolute fine tooth comb, because it's too late after that.
That final inspection is key, I guess. Just go through everything, because you haven't paid them yet. They want to get paid, so they'll do whatever it takes to get stuff sorted. And like you said, I've seen it so many times. After that last payment is made, see you later.
I've had a couple of clients in the past, similar scenario, and I had one client who, made the payment, and afterwards he found out there's probably a good $50,000 worth of works that needed to be done to rectify the mistakes they made. But the builder just flown the coop and said, see you later, I'm out of here. So it's a very important stage. Worthwhile to note as well, I know Eddie mentioned it very briefly, just to reiterate it, progress payments, clients are only paying interest only on the amount that's drawn down as the progress payments are made. So it doesn't convert to principal and interest until the loan is fully drawn, and then we move forward from that.
100%.
Which is good, because you don't want to be paying principal and interest on the full loan amount from day one when you've only utilised a certain portion of it. So it's good from a cash flow point of view. Typically, people might be renting or living in a different house whilst that their new house is being constructed, so they've got a lot of outgoings. So that helps minimise those outgoings. So
absolutely, mate. Absolutely. This is pretty much you summed it all up regarding the process and the payments. So I guess to have a smooth process, a lot of what you mentioned earlier, like cash flow, is key. Like you've got a rental or another mortgage that you're paying, and then you've got the new land plus the construction going on, so you're pretty much double paying. So making sure you've got enough funds to cover the period, having realistic time frames where you understand this could take 12 months, it could take 24 months. Okay, like I think now things are better, but like in the last couple of years, the construction industry has been it was blown out, with builders going under and just delays and prices going up. So I've seen construction periods that have taken more than 2 years to finish. So if you haven't got enough funds to cover that period, like you're going to be in trouble making those repayments over a couple of years. So it's key having some buffer to ensure you're on top of repayments. Obviously, working with a mortgage broker makes things a lot easier, where we take care of most of the process. You don't need to worry about dealing with the invoices, dealing with the approvals, dealing with all that sort of stuff in the background. So that really helps. Having a fixed price contract and trying to stick to it, because a lot of amendments sometimes are add-ons. You have to pay out of pocket for them after the bank approves them.
Yeah, correct. Yeah.
So if you want to change anything after, you're going to have to pay that out of your savings, out of your pocket.
And we do see that quite regularly, don't we?
Look, I've done that, but I was comfortable doing that because I capped my borrowing, and then the extras I wanted to do, I had the cash to pay for them in cash. So that helped that way. But I've seen clients just do the add-ons and then they spend the money, and the bank wants to see the difference paid, the variations paid before they fund the rest. So that can be an issue there. So just understanding how much you can spend, how much you can borrow, all that sort of stuff. Just have all these, like be realistic about them, be honest to yourself about them, and otherwise it's not too scary or too complicated. It's just really understanding what you can afford, what you can pay, what you can due in terms of repayments, having those, laid out for you.
And I guess it's really important to stay on top of the process, because there's nothing worse than when invoice is submitted to a client sits on it and then goes, oh, geez, I haven't even thought about that. I've got to get it to the bank. So they send it to the bank and they sign off and saying that, the work's been done. The bank may take a little while to actually make the payment. Some lenders are very quick. Some are not so quick. And the last thing you want is a builder going, I haven't been paid. And if you don't pay it within a certain time frame, we're walking off the job. And all of a sudden it creates a whole raft of other issues, because I guarantee you most of these builders are working on multiple job sites. So if you're not paying them on time or within a reasonable time frame, they're going to walk and they're going to go, well, we'll go and finish off this other project where I'm getting paid on time as well.
100%. So. Yeah, you want to try not to disrupt the flow of the project, especially with builders. Like if they trying to get like 5, 6, 7 different tradies a day in, and then something gets disrupted, like it can be a headache.
Has a massive flow-on effect on to other projects.
So you want them on your side, and you want to keep them happy, pay them on time, but also check on what they're doing. Try to visit the site every now and then, just see what's happening, just see how it's all going.
That's a big one though, isn't it? Like I've always thought about, I don't think I'd be able to invest the time to actually constantly go there and visit. And you need a bit of not expertise, you need a bit of knowledge around what you're actually looking for as well. Like I've heard of people that have walked in and going, that wall's not quite straight. And I'm going, how would you tell? Like I wouldn't have a clue. I would walk in there, everything looks fine, and sign off and everything.
Yeah, you don't need to be an expert. Like you know what you know, but just being there in case something is going on, or just to be along the progress of things, how they're going, and be involved in it. Because when it comes to like really knowing if they're doing the right job or not, that's when a building surveyor is sent out and they actually make sure all the specs are being met, everything is being followed and all that sort of stuff. So you don't really need to worry about that stuff. But like you never know.
Simple thing is you just can't take everything on face value and just assume that everything's been done right. You've got to take a lot more of an interest in it. And
like you don't know what's above the ceiling, then you look in there and it's just a mess. So like
unfortunately people find out the hard way. So
I guess that like it's a good thing to talk about, like the common pitfalls to avoid or be aware of. So probably that's one of them.
Underestimating costs as well, having those budget blowouts. That's like you mentioned earlier on, you've got to really stay on top of that and at least have the cash flow so that if things do start to blow out, you've got the cash to be able to fund those extras that you're going to, because there's nothing worse than having financial strain. It doesn't make anyone feel good, and just delays everything. So one of my big tips to people, especially in this current environment with what we're seeing with builders, as you were saying earlier on, is just do some research.
Yeah, absolutely.
Really understand who they are, how long they've been around for, what jobs they've worked on. Speak to people who have actually engaged that particular builder. So I'd be asking the builder, can you just give me some names and numbers of people, references of people who have used you before? Ring them up, find out. Don't just rely on a piece of paper that says that looks like a testimonial, because you don't know if that's legitimate or not. 100%. So the last thing you want is a builder to go under halfway through a project, because it becomes really messy. And unfortunately, we've seen that with a lot of the bigger builders here in Australia. So ones you would typically least expect it from has actually happened. So choosing the wrong loan product, look, I haven't seen a huge amount of that, but it's obviously something to keep in mind. But if you engage a mortgage broker to work with you, typically that isn't going to actually happen. We're the ones who are doing all that research for you on your behalf and making sure that whichever lender you're being placed with, and you're getting the right type of product that goes with that as well.
I've seen that happen where people already have a property, they doing renovations or they want to build something else, they tap into the equity they've got. So they take out $300,000-$400,000 thinking that's what I need to complete the construction. And then they pretty much self-funding the construction as they go. They're paying the builder in cash out of the equity that they've released. And then they blow out like on expenses and how much they're spending. and they reach a stage where they don't have enough funds to complete the project, and now it's so hard to get finance because no bank will take the property halfway built.
Yeah,
and
correct.
That is the issue there. So that is where I see like the wrong loan product being done.
Yep.
And that's something to be careful about.
No, wise words. Yeah, the other one is around delays in submitting drawdown requests. As we mentioned earlier on, you just need to be right on top of that. When the invoices come through from the builder, stay on top of it, do your homework, make sure the work's actually being done. So whatever they've invoiced you for, whatever particular stage, get that into your mortgage broker, get that into your lender, whatever the process might be. We'll guide you through that process as well. But just don't sit on it, because as I mentioned earlier on, you don't want a builder who's ringing you every single day going, where's my money? Because you'll end up with a very unhappy builder. Just with regards to the loan converting at the end, as we've mentioned, throughout the progress payments, it's all interest only on the amount that's actually being drawn down to that particular point in time. Following that, the loan will, after that final payment's been made, the loan will convert to principal and interest. So it sounds quite simple, but a lot of people don't factor that into their everyday cash flow because it's going to ramp up your repayments very quickly. So you just need to be mindful of that, work through the numbers before you even really start the process, because you don't want any surprises down the track. So
absolutely,
they're probably the main pitfalls to avoid or things to be looking out for. So.
Yeah, and especially with that loan conversion, sometimes when the construction is complete, the loan converts to a standard variable home loan, and there's no pricing attached to it.
Yeah.
So they give you like the standard variable rate, which is like probably 2% higher than what you'd be on.
Yep.
And also another thing, sometimes if you're going over 80% during the construction, by the time construction is complete and everything's done, the value would have gone up, and you could potentially get sub 80% LVR, which will help you even get an even lower rate. So yeah, that's why it's important to be mindful about these things. Yeah,
and look, I know we keep harping on it, but obviously a good broker will help you through that whole process. You know, when we're going to be well and truly across the final payments being made, making sure that the interest rate is at its appropriate level as well, and potentially look to get the property revalued upon completion 100%. And see if there is any.
And some people, they leave landscaping and bits and pieces out of the contract to do after. Yeah. So that's where you do valuation to see if there's any equity to tap into to complete the works. Like they'd need $20,000-$30,000 just to do the fence or the landscaping or curtains or whatever it is. That's where, you know, doing that valuation when it's done, it's very important. So I think we almost covered everything. It's a big topic and there's a lot of details in it, but that's pretty much what we do and help people do on a daily basis, and we can make the process a lot easier. So by all means, always reach out for any questions or for anything we can help with. Construction loans are very popular. A lot of people do them. It's not as complicated as it sounds, and obviously, again, working with a broker, you don't need to worry about a lot of the things that we mentioned because we will be doing that on your behalf. But otherwise, we'll wrap it up. And thanks again. Another week for listening, for watching. Please always leave us any questions you've got. Subscribe, leave us 5-star reviews, and we'll see you all again soon. Thank you.
Take care, everyone. Bye-bye.